Welcome along to FTUK's Non Farm Payroll live stream for the month of February. The jobs data out of the Bureau of Labour Statistics will be hitting the wires in, just under 15 minutes' time. It's good to see you. How are you doing? Hope your trading week has gone very well. Someone frightened me to death just before we came on the stream saying, you've titled everything wrong. It's March, not February. And I thought, no, actually, it's February. You are in the right place, I promise you, because, of course, we're in March, but March has not completed yet, so we don't know how many jobs have been created in March until April. So you get the idea. You are in the right place. It's going to be a good one. Markets are volatile and we have a lot to get through as always, as you can imagine. Let's jump in. We're looking for 160,000 new jobs to be created in the United States over the course of the last month. That's up from the previous 143,000. Now, the whisper number was pretty low, 120,000. So, I don't know, I feel a little bit in line with that, given the ADP as well was pretty low as well this week. I think it was around about 73, 74, something like that. Much lower than expected. But there's a lot of changes going on at the moment as well in the overall themes of what is affecting the market, so which we will get into in some detail. The unemployment rate as well, that's expected to stay flat, 4% on the unemployment. Personally, I think that's good. It can always be a canary in the coal mine, but I don't think it's going to change too much today. Average hourly earnings as well, that's pretty much a nothing burger for me this time around. Year-on-year rate expected flat at 4.1%, and also the month-on-month reading a slight tick down on that number, 0.3% from the previous 0.5. Now, that in itself will be deflationary, but we are celebrating this month on FTUK. We've just had over 2,000 followers on Twitter, so we thought we'd really push the boat out, and you still have time to enter our giveaway. This is a fantastic giveaway, the best prizes we have ever done in any live stream. Up for grabs today is a $5,000 new instant funding account. That means you could be trading an instant funding account first thing on Monday morning. Fantastic. We've never given an instant funding account away before. The second prize is a one-step, a 10K one-step, and look at the two-step, $25,000 two-step. And all you need to do to enter is tell us what you think the non-farm payroll number is going to be. So if you're here, just click in the link in the description section. That'll take you to a form. You still have time. You've still got 12 minutes to enter. And then if you're closest to the number, the top three closest will obviously win the prize, and we will announce the number. We'll announce the number, and then we will announce the winners straight away after the stream. Okay, right. We've got 12 minutes to go. There is a lot to do. So, non-farm payrolls, what is the deal? Well, you may have noticed that markets have been a little bit on the volatile side. The stock market is looking really under pressure. The dollar is looking a little bit weak at the moment, and it's a little bit overextended as well in my book. But, I think things are changing. We've had a narrative of hawkishness and dovishness for a very, very long time. I think we are finally at the stage when that is starting to change. So what we're going to do is paint out some broad strokes to get everybody used to the way that we can think about the economic data and the way that is then influencing the price action. We're used to this, hawkish, dovish. Hawkish is stocks down, dollar up. Okay, fine. We live with that for a couple of years. Dovish is stocks up, dollar down, and that has been playing out as we've hiked interest rates, we've topped out, and we've started to roll back down. Okay, but you may have noticed that the stocks have been pushing a little bit to the downside, and also the dollar has been weakening this week, particularly also what happened in Europe this week, and we'll talk about that too. But something's changing. What is it? Okay, well, there's a new term that I think everyone kind of needs to get used to, and it's this: fiscal deficit. Now, when you think about what fiscal means, it's very simple. It means tax. So if you are, for example, if you are a government, and this is the amount that you want to spend over the course of a month, over the course of a year, you're obviously taking a certain amount in tax revenue, but there's obviously a gap between what you have to spend or what you want to spend and what you're able to from the tax that's coming through the door. So therefore, if you want to spend that much, you have to then obviously borrow the final component of that. Now, it doesn't take a genius to work out that if you keep doing that over the long term, you're going to start accruing debt. And that is essentially a fiscal deficit. It's the difference in terms of what a government wants to do and what they have to do to plug the gap. Now, that in itself is not a bad thing. Running a fiscal deficit is something in the United States, that's what they do. And it is very good for inflating asset prices. Why? Because essentially, if you think about it, when the government is spending into the system, system, that money goes into the economy, but where does it always end up? Essentially in one form or another into the private sector. If it's moved into the private sector, then that's obviously into the companies that comprise these various different stock markets, because of course stock markets are made up of private companies. So therefore, all that spending moves into the stock market, and that's why we have those asset prices and those indices at very, very high levels. As soon as so in that sense, it's not a bad thing. But as soon as you start to change something, you've got to start paying attention, because the market will start to price it in. And something has changed. And the Trump presidency is now, it's a couple of months in now, and what we're starting to see is that the overall umbrella of policy by the Trump administration is to reduce the deficit, is to reduce that amount of reliance on borrowing. Well, if you're not making up the tax fall yet, what are you going to do? You're going to lower the spending. That's less money going into the system. As a result of that, less money in the companies, valuations will need to come down. So the stock prices are pushing at those elevated levels, and the sensitivity, which was where everyone was completely obsessed with interest rates, has now started to shift, and that is where we're getting this slight disconnect from. So when we think about it for non-farm payrolls, what that's going to mean for today, I actually think that it's going to make things a little bit easier from a stock point of view, from an indices point of view, if that's your flavor of trading NFP. Now, what that's basically going to mean is it's going to move in tandem. So if you basically, if we're looking at growth and we're looking at lower jobs numbers, that essentially should now be bad for stocks. Whereas historically before, when we were thinking of dovishness and hawkishness, what would have happened is a low number would have given us a sense of dovishness, that is cut rates, and that would have supported the stock market. That's the key change. But when it's not a done deal yet, but this is just a new theme that is potentially coming along. So if we look at the actual stock market itself, let's just bring that up on here. So this is the S&P 500 here, and this is on a daily time frame. And you can see this is my area of commercial hedging that I'm paying attention to. And we've already tagged the bottom of it yesterday. So this is a really very big line in the sand for me. 5,700-ish, roughly around that area. I would definitely, if we get a weak jobs number today that's in line with ADP, I would expect to see, maybe that level's going to cave. If we get quite a robust number, I would be interested to see if we actually get any bottoming out here, and then that starts to support the stock price. If that is the case, then I definitely think this narrative will be a bit of a thing. I think that could be something that is very, very prevalent by watching the jobs data. Is it going to work out like that? Don't know. But as a trader, you have to have a scenario, you have to be prepared, and then adjust and work accordingly from there. So that is for the stock market. Now, the dollar is a bit of a different beast, and it's not been... it's not really sort of like played out in exactly the same way. For the dollar itself, it's still moving in and out of this hawkish, dovish narrative, and we have got a slightly weaker dollar at the moment, where I actually think it's a little bit overextended, certainly on the dollar index, and definitely against the euro against the dollar, which we'll talk about in a second. But that is essentially lower growth, more pressure on the Federal Reserve to carry on reducing those rates. Don't forget, there's a bit of tension between the Federal Reserve and the White House in terms of not wanting to lower those rates. That is giving us this sense of, you need to be dovish, you need to cut rates, and therefore dollar down. So we're ending up in a situation where we've got pressure on the stock market and also downward pressure on the dollar as well. Never forget which way around your dollar currency pairs are as well, if so don't get confused with that. So it's very, very interesting. Now, when we look at the best market to be working with right now, and I said this in January, is the euro dollar. It really is amazing. And the move that we've had on euro dollar so far this year, I mean, it's like nearly 7% from the yearly bottoms down here, which was, what was that? The middle of January, basically. Now, look at this move here. You can see this huge amount of candles. That's not just any old retrace. I put in one of the bits of analysis we did in one of the emails that we send out every week. I highlighted this ascending wedge here, how that bearish structure should play out. And I remember saying that area of support, and I said, if the structure fails, it will be because something significant has changed. And it has. It's massively changed. And the change is what happened in Europe this week. So basically, the new German government has decided to loosen fiscal rules. They're pumping basically 500 billion euros into the system. It stopped the ECB from being, moderately dovish, giving us a slightly more hawkish tone from the ECB. And there's a disconnect. We've had central banks all doing things in tandem. That is now starting to change. Yields spiked on the Bund. That created demand for euro dollar, and then obviously the euro repriced accordingly. I don't think it's got too much further to run, but there's one thing that could really sort of like make a mess of this party, and that is a bad situation occurring over tariffs. You get something coming out from the US saying, okay, we're going to slap huge, great big tariffs onto the European Union, something that's not expected out of the blue, and that's highly possible when you're dealing with someone like Donald Trump, and it can happen in a flash. This is a move that's going to reprice and it's going to turn around very, very quickly. So these sorts of areas, I think we're going to get volatility today in non-farm payrolls around this area. I don't think we're going to get much sense of direction. But what I want to do is I want to see this today, look back over the weekend and see how well a new narrative is starting to play. That's really where it's all going to be. It's going to be centered around. Okay. So we've got just under 4 minutes to go. So what I'm going to do is I'm just going to give everybody a quick heads up on what is coming up over the course of the next week. We've got a fantastic new trader interview. Have a quick look at this guy here, Emmanuel from Africa. Phenomenal trader. I'll play a quick excerpt and we'll have a quick discussion about it afterwards. Have a quick look.
And I like what you said about having a regular retail brokerage account running along the side, because in that situation, it's just too easy unless you've got a huge amount of experience and you've been around the block, for year after year after year. It's so easy when you're then becoming drawn down to think, oh, it's all going wrong, and you start changing everything left, right, and center, and you forget to just stay with the plan.
Exactly. That's precisely what we mean by psychology in trading. I think 90% of traders, even 2-year, 3-year-old traders, have a good trading plan. Even a trading strategy you copy online on Google, not one you develop yourself. If you stick with it, you can certainly make a profit. But psychology in trading is the most important point I think we often neglect, because once you become distraught, oh, I've lost a heavy losing day, or then you get confused and you start getting off the trading plan. You start trying to take some luck, and that was really just it for me. And I started spiraling until I had to caution myself, saying, okay, I'll just depend on my regular brokerage account. And because I had a plan for the money initially, and that was the problem, when you're like, oh, I wanted to use this profit, and then everything seems to go down from there, and you just get psychological, you get emotional and start emotionally trading. You're no more following a strategy, you're just emotionally trading,
Yeah, I've had some fantastic interviews recently on the YouTube channel, and Emmanuel, he's now funded on a level 2 account, a level 2 instant funding account. He's made it up to level 2, and he's a real seasoned trader, and we had a fantastic discussion on psychology and the way that he's done it. He has a retail trading account which he runs in the background to keep him on track in case any of his prop accounts are not working for him. A really interesting guy. I loved his approach as well. That is a new interview that's going to be coming on the YouTube channel this week, so it's something that you definitely want to keep a check on. Make sure you subscribe to the YouTube channel as a result of that. So we've got about 1 minute and 40 to go now, so let's go over to the charts and let's settle down and get ready, because you got to concentrate. So remember, in theory, we're looking for weak numbers to drag those stocks, high numbers to lift us up. 90 seconds to go. You've got the S&P 500 here in the top left. We've got gold in the top right. Dollar index down there. I'm watching those 102s down here. We could get there today. And then the euro dollar is in the bottom left hand corner. We've got 1 minute to go. Volatility, that's expected, but yeah, and also as well, bear in mind that we could get some revisions to last month's numbers as well. That can always be an emphasis for the stock market as well. So here we go. We've got just under 1 minute to go now. And as always, as we say, you don't need to trade this, but you should be aware of what's going on. You should always have a game plan. If you're carrying positions into this, make sure you know where you're wrong. Make sure you know where you're wrong. It's never worth trying to blowing an account up on a non-farm payrolls, that's for sure. Opportunities, they are here next week, the week after. The market never stops spitting out the opportunities. Okay, good luck, everyone. 20 seconds. $160K expected. 10 seconds, here we go. $151.
For the NFP figure, average earnings 0.3% month to month, 4% year on year, unemployment rate 4.1%.
4.1% on unemployment. Look at that euro dollar go.
34.1, participation rate 62.4%. The Canadian employment change 1.1k, unemployment rate 6.6%. The Canadian participation rate was 65.3%. So again, the headline NFP report is
151. I mean, it's not a huge difference. I think that'll give us a little bit of chop on some of these rates, but it's not slammed it out the park. Yeah, just a little bit of dollar strength coming in now. Let me just go back down to the 1 hour. Yeah, we just tag the bottom of this area here, the support area again at 103.53 on the dollar index. Yeah, I need to dissect that one. Yeah, 4.1. So a slight uptick in the unemployment rate. Okay. Well, there we go. Interesting to see how that market reaction then spills over into the US session. Of course, and you can often find with non-farm payrolls that the market reaction here can get completely reversed in the next 5 or 6 hours. So, if you missed it, if you've not been in tune with it, then don't worry, because there's more opportunities over the course of the next few hours, that's for sure. But yep, very, very, very interesting non-farm payrolls. As always, lots to think about over the course of the weekend. Okay, right. So we've got several things that we tie up before we want to announce the actual winners. And good luck to everybody that entered. I believe that there were quite a lot of people that entered. And bear with me 1 second. I want to quickly draw people's attention to this cool feature that we've been using on YouTube. This is really cool. If you've not used this yet, make sure you subscribe to the YouTube channel. We're running a quiz every day. There's a new quiz question gets posted every day. And it's very, very cool. It just pops up on your phone when it's posted. So when you're out and about, when you're on the bus or the train or whatever, in the going to work, and you want to sort of like have your knowledge test, we will prompt you, we will test you on your prop knowledge, on your fundamental knowledge, on your trading knowledge, anything to do with markets and economics. It's really, really cool. All you need is there's nothing in it. It's just kind of like, a little bit of educational value. All you need to do is subscribe to the YouTube channel, and then the little quiz questions will start popping up in your notifications. And if you know the answer, see how well you can do. It's really, really cool. Okay, right. I do believe that we are now in a position. Let me just go off here now. We've got some winners. We've got the wow, congratulations. This is the best giveaway that we've done. I'm quite excited. Let me just get my slides in a row. Hang on 1 second. There we go. Yeah, fantastic prizes. The best we've done. And here are the winners for everyone. Congratulations goes to the first place, and that is, gosh, you're testing my pronunciation now. Skazi. You have won a $5,000 instant funding account that will be wired to you over the course of the next few hours into the weekend, and you can have that to trade with for free on Monday. Congratulations to you. The 10K one step goes to Henderson Orobora. My goodness me, that's a great username. Congratulations to you wherever you are in the world. And then also as well, the two-step, the 25k two-step, that's probably, it's an amazing price. I mean, the capacity you've got with that, if you know what you're doing, it is amazing. So congratulations to Renault, I can't pronounce it, but congratulations to you anyway. It's there on the screen. We'll get that sent out in the emails as well, so that everybody is covered. But thank you to everybody that took part. And well done. Great non-farm payroll giveaway. And thank you for subscribing on Twitter. You know, it's great to grow these things, and having 2,000 followers now on Twitter is definitely something for us to celebrate. Okay, finally, let's talk about your weekend offer, and everybody else is not excluded. We have an amazing weekend offer for everybody who's a part of FTUK or wants to buy a proper account with FTUK over the weekend. It's a 30% discount, but we've included add-ons in this as well. The code is NFP30, and the instant funding account, I cannot tell you how popular the new instant funding model has been. It really is been very popular, but now over the course of the weekend you can actually get the add-on, which is the most popular add-on, the extra 2% drawdown on the account. You get that thrown in for free, which is outstanding. So you get an instant funding account, 30% discount, and the 2% drawdown increase on that account. It's only going to be for the weekend. If you are in the market for a 1 or a 2-step, and there are no rules on which account is the best one, it just depends how you want to work, then you can get a 30% discount on all 1-step and 2-step challenges over the weekend, and you get the weekly payout add-on added in there as well for free. So NFP30 is the code that you need for the weekend. And make sure you take advantage of it, because it will be gone by Monday, and they do tend to be very popular. That is everything that we've got for now. A good non-farm payroll session and a good live stream. Hope you have had a good week in the markets. Inflation data is going to be next week, and that is expected to be quite soft, so we'll see how that maps out over the course of the week. Have a fantastic week in the markets, and we will see you all next Friday.